my name is Junaidah Majid. My student number is 2024-150891. What is Islamic finance? Islamic finance is a Sharia-compliant financial system rooted in principle of equity, transparency, and risk sharing. It prohibits interest and promotes ethical investment that benefit society. Islamic finance promotes equity. All parties involved must be treated fairly and justly. This means that profits and losses are shared between those who provide capital and those who use it. Encourage partnership rather than one-sided transactions. Another important is transparency. So every financial agreement must be clear so that everyone involved knows the terms, risks, and rewards upfront. Number 2 is prohibits interest, speculations, and immoral sector. Islamic finance prohibits interest, excessive uncertainty, and investment in immoral sector like businesses related with alcohol, gambling, or anything harmful to society. Also ensuring ethical and society responsible financial practice. Number 3 is growing influence in both Muslim majority. Islamic finance is becoming more popular not only in Muslim countries but also around the world. Many people see it as a fair and ethical way to do business, so more banks and investors are using it. Number 4 is about support ethical investment, financial inclusion, and resilience. Islamic finance promotes ethical investment, enhances financial inclusion, and builds economic resilience through its value-based risk-sharing approach. And the last one is research gap. A research gap remains as Islamic finance lacks holistic integration into the global economy, limiting its full potential and wider impact. So, more work is needed to make it a part of the world's financial system.
Now I will share about what is Takaful in Islamic financial instrument. Takaful is Islamic insurance. It works by people helping each other. Everyone pays into a fund and the money is used to help those who face losses. Point number 2. Takaful is also prohibit riba, gharar, and maisir. Takaful is Islamic insurance founded on mutual help where participants contribute to a shared fund to support one another in times of need, in line with the Sharia principle. Point number 3. Takaful began in Malaysia in 1984 following a fatwa committee ruling that deemed conventional insurance non-compliant with Sharia, leading to the development of a halal alternative. Point number 4. Promotes mutual risking, community welfare, and ethical finance. Takaful supports sharing risk together, helping the community, and making sure money is managed in a fair and ethical way. Okay, now we look at the Takaful industry, global reach and growth. The Takaful industry has expanded globally, operating in 65 countries with 344 firms in 2022, up from 274 in 2012, showing strong growth and increasing demand. Now, point number 2 is for global Takaful assets. Global Takaful assets reached $73 billion in 2021 and are projected to grow to $128 billion by 2026, reflecting rising global demand for Sharia-compliant insurance. Point number 3 is for major markets. The major market for Takaful are Iran with $30 billion in assets, followed by Saudi Arabia at $18 billion and Malaysia at $12 billion. It's highlighting regional leadership in the sector. The last point is for 77% of Takaful operators reported profits in 2022. In 2022, 77% of Takaful operators reported profits, indicating strong financial performance and growing market stability.
Okay, this is for case study Takaful in Malaysia. Family Takaful leads the market, driven by rising demand for Sharia-compliant life and health protections. It offers long-term financial security aligned with Islamic values. Point number 2 is by 2022, Family Takaful recorded 10.6 billion ringgit Malaysia in new contributions, marking an 18.3% year-on-year growth, reflecting strong consumer demand and market confidence. Point number 3 is for individual contributions. Individual family Takaful contributions rose 25.4% in 2022, reaching 7.87 billion ringgit Malaysia, highlighting increased personal uptake of Sharia-compliant protection plans. Number 4 is the family Takaful penetration rate increased to 20.1% in 2022, indicating broader adoption of Islamic insurance among the populations. Next is Takaful market indicator. By 2023, Takaful income approached $34 billion, signaling continued growth and increasing market strength globally. Number 2 is for life and motor insurance. In the global Takaful industry, life and motor insurance are the dominant segments contributing the most to overall growth. Life Takaful supports long-term financial planning and family protections, while motor Takaful offers essential coverage for vehicle owners. Number 3 is for growth drivers. The healthcare sector is growing rapidly due to rising medical needs, increasing public awareness, and strong regulations. As people live longer and face more health challenges, demand for healthcare service continues to rise. Number 4, for the last point, is use for Insurtech. The use of Insurtech like apps and online portals is enhanced Takaful accessibility, making service more convenient and user-friendly. These digital tools allow users to easily compare plans, submit claims, and manage policies anytime and anywhere.
For Takaful role, many Muslims still lack access to insurance due to religious concerns, making Takaful a key solutions for promoting financial inclusion in these communities. Takaful offers a Sharia-compliant alternative based on mutual aid and ethical practice. By addressing religious concerns, Takaful helps expand insurance coverage and promotes financial inclusion with Muslim communities. Point number 2. Micro Takaful offer low-cost Sharia-compliant insurance for low-income groups, providing basic protections. It offers basic protection for health, life, or assets at a low cost, making coverage accessible to those who typically cannot afford traditional insurance. By promoting financial security and social solidarity, Micro Takaful supports poverty reductions and financial inclusions in underserved communities. Point number 3 is for helps mitigate poverty impacts, example, illness and disability. Micro Takaful helps reduce poverty impacts by offering affordable coverage against risks like illness or disability, supporting stability in vulnerable communities. Point number 4 is for support broader financial inclusion. Micro Takaful supports broader financial inclusion by providing accessible Sharia-compliant protection to underserved populations, integrating them into the formal financial system. It helps integrated low-income groups into the financial system, offer them protection and peace of mind. For Takaful as a pillar of ethical finance. Point number 1 is Takaful reflects the ethical, social, and inclusive values of Islamic finance. Takaful reflects Islamic finance values by promoting mutual help, ethical conduct, and social justice. It avoids interest, uncertainty, and gambling, ensures Sharia compliance. Through shared contributions, it offers inclusive protections, especially for those avoiding conventional insurance. Point number 2 is for resilience, fast-growing and adaptable. Takaful is resilient, growing rapidly and adapting well to modern needs. Its flexible ethical model appeals to a wider audience, supporting innovation while staying true to Islamic principles. Point number 3 is positioned to bridge gaps. Takaful is well positioned to bridge gaps in a global financial inclusion by offering ethical, accessible coverage to underserved communities, especially those avoiding conventional insurance. Point number 4 is a critical instrument for sustainable. Takaful serves as a vital tool for sustainable and equitable development by promoting risk-sharing, financial security, and social solidarity, especially among vulnerable populations.
Assalamualaikum warahmatullahi wabarakatuh. Hi Madam Zahira. My name is SITI HASSAN. My student ID is 2023-895776. For a start of the comparison between Takaful and conventional insurance, on the aspect or concept is Takaful based on the mutual cooperation where participants contribute to the fund that provided assistance to the members in the time need, while conventional insurance based on risk transfer. Policyholder pay premiums to the insurer in exchange for coverage against specified risks. The second comparison on the risk sharing versus risk transfer. For Takaful, risk is shared by among all participants and profit are contributed according to the terms of the agreement, while conventional insurance, risk is transferred to the insurer and profit are generally kept by the insurer. Third comparison on the compliance. For Takaful, fully comply with Islamic principles, especially the prohibited of riba known as interest, garar known as SITI, and masir known as gambling, while conventional insurance may involve elements prohibited in Islam such as interest and could be considered non-compliant for Muslim participants. Fourth comparison on the profit distribution. For Takaful, surplus profits are shared among participants with the operator receiving a management fee, while conventional insurance surplus is typically retained by the insurer as profit. Fifth comparison on the ethical and religious consideration. For Takaful, must comply with Sharia law, avoiding activities like alcohol, gambling and riba, while conventional insurance will not subject to religious guidelines and investment may involve prohibited activities. Next, comparison on premiums. For Takaful, premium which is contributions are based on the mutual risk sharing module, while conventional insurance premium are based on the risk assessment of individual and company profit margin. Furthermore, the comparison on the regulations. For Takaful, regulated by Sharia law and national insurance regulations, which Sharia Supervisory Board, while conventional insurance was regulated solely by national insurance laws and financial authorities. Further, the comparison on the claims process. For Takaful, claims are handled according to the Sharia principles, ensuring fairness and transparency, while conventional insurance claims are handled by the insurer as per the contract terms, often without ethical consideration. Lastly, the comparison on the type of coverage. For Takaful, offer various products like health, life and generic insurance, all structured according to Sharia, while conventional insurance offers similar type of coverage but may not adhere to religions or ethical guidelines. Next, we will discuss the key difference in financial models. Takaful on the risk model. Takaful use risk sharing, while conventional insurance use risk transfer. Next, on profit model. Takaful shares profits with participants or charity, while conventional insurance retain profit. Moreover, on investment, Takaful invests ethically, avoiding industry like alcohol, gambling, while conventional insurance does not. Lastly, on the prohibited element, Takaful prohibit riba, garar and masir, while conventional insurance does not. There are advantages and disadvantages of Takaful from both the financial and ethical perspective. First, advantages on the profit sharing. Policyholders share in Takaful fund profits, enhancing returns over traditional insurance. Second, advantages on the risk mitigation. Share risk reduce financial burden, providing a safety net for member. Third, advantages on the transparency. Open fund management build trust and ensure accountability. Fourth, advantages on the ethical investing. The investments align with Islamic principles, avoiding harmful sectors. Lastly, on the advantages is on social responsibility by promotes community support through mutual and social welfare. While the disadvantages of Takaful from both the financial and ethical perspective are: firstly, limited investment. Sharia compliance restricts investment options, affecting potential returns. Secondly, high cost. Sharia compliance increases administrative costs, raising premiums. Third, capitalization issue, Sharia compliance, fund face challenge in capitalizations and growth. Fourth, ethical dilemmas, to balancing Sharia compliance with financial goals can lead to ethical conflicts. Finally, disadvantages is limited products, ethical constraints limit product diversity, restricting policy choice. Next, we go to the real-world application and case study in PRUBS and Takaful pioneering digital transformations in Malaysia. PRUBS and Takaful, which started in 2006, is a top Sharia compliance, life and health Takaful provider in Kuala Lumpur, where its main office is located. The bank Simpanan Nasional BSN own 51% of the company, while Prudential PLC owns 49%. Their main products are family and general Takaful. Firstly, for IT infrastructure, before transformation, legacy system on-site service, but after transformation, secure whole infrastructure. Secondly, on capital expeditory, before transformation, high cost for updates, but after the transformation, reduced cost, no pricey updates. Thirdly, on regulatory compliance, before transformation, ensuring Malaysia laws allowed, but after transformation, ensure compliance was located closed. Next, on the operational efficiency, before transformations, IT crew struggle with the daily tasks, but after transformation, reduce demand for on-premises hardware. Following on the customer experience, before transformation are not recorded, but after transformation, improve user experience, easier produce. Further, on the financial performance, before transformation was 37 million losses in 2019, but after transformation it was 7 million ringgit profit in 2020. Furthermore, after the transformation, there are brand strategy with digital first focus for cultural alignment. After transformations, company culture align with digital aims. For product delivery, after transformation, digital insurance product release. For email system, after transformation, Office 365 for better security. Last but not least, for system monitoring, after transformation, 24/7 monitoring via network operations center. There are impact of Takaful on economy and company performance. Firstly, on financial inclusions. Financial inclusions boosts company performance with limited economic impact. Secondly, on digital transformations. Digital transformation enhance both economy and company performance. Thirdly, on regulatory challenge. Regulatory challenge hinder both economy and company performance. Finally, on the economy growth. Economy growth derive economy impact with minimal company performance. That's all. Thank you.
Assalamualaikum, my name is SITI NURHUDA binti AHMAD FAUZI, and I will continue on the critical analysis and future trends. The first one we will see on the challenges of Takaful in non-Muslim majority countries. So despite its success in Muslim majority countries, Takaful faced a lot of challenges in non-Muslim countries, so let's explore them. One of the most fundamental challenges is low public awareness and misconception. In many non-Muslim society, people tend to view Takaful as a religious product that's suitable only for Muslim. The use of Arabic terms such as Takaful and Tabarruk create a language barrier and perceive of lack inclusivity. Not only that, financial advisor and institutional stakeholder often lack proper training in Islamic finance, which result in poor marketing and limited availability. For instance, while Islamic banking has progressed significantly in countries like UK, the adoption of Takaful product remain marginal due to limited demand and understanding. Secondly, the regulatory limitation create a major hurdle. Most national insurance laws are based on interest-based and profit-driven structure that conflict with Sharia compliance. In countries like United States and Australia, Takaful operators find it very difficult to operate under legal system that doesn't recognize Islamic model. Licensing issue, fund segregation policies, and risk-sharing principle often don't fit within fund conventional framework. In contrast, countries like Malaysia and Bahrain have created specific Takaful law that comply with both Sharia and international standards. This effort have helped create more stability and clarity for Takaful operator. The third challenges involve investment restriction. Takaful fund must be invested only in halal or Sharia compliant instrument, excluding sectors such as involving alcohol, gambling, arms, or interest-based securities. This become particularly limiting in countries without strong Islamic capital market. For example, in South Africa, the scarcity of halal investment has weakened Takaful provider ability to generate sufficient return and remain competitive. Next is the issue of free Takaful. There is a very limited number of free Takaful operators globally, especially outside the Middle East region. As a result, many Takaful companies are forced to use conventional reinsurance out of necessity, while some Sharia board allow this under concept of darurah necessity. It still poses a long-term threat to Sharia compliance. In countries like Germany or Canada, Takaful firms often rely on global reinsurer like Swiss Re, which raising concern about partial non-compliance. Lastly, the high operational costs and limited economic of scale faced by Takaful companies. Typically, they have smaller customer bases and less capital compared to large conventional insurer. This makes it very difficult to spread costs or invest in advanced infrastructure, resulting in high premium and reduced profit margin. A Takaful startup in Australia, for example, would struggle to compete with global players like Allianz or AXA, especially in popular insurance sectors such as automotive and health. Next, we will be discussed on how Takaful is adapting in globalized economy. Despite those challenges, Takaful industry is evolving in the global economy. There are three major ways it is adapting to the demand, which first we see the significant progress in product innovation. Takaful providers are now customizing plans to meet different market needs, such as Family Takaful, Health Takaful, and Micro Takaful. Family Takaful function like life insurance, combining saving and protection using profit-sharing mudarabah or agency wakalah models. The next is Health Takaful. Health Takaful covers medical expenses and tailored for middle or upper class client. The last one is the Micro Takaful, which is designed for low income or rural population, offering affordable coverage with minimal contribution. In Malaysia, for example, Etika Takaful and Takaful Ikhlas have pioneering a wide range of products tailored to all income groups. Secondly, digital transformation, which is the key driver of adaptation. Takaful providers are utilizing technology to reduce operational costs and improve customer access. Mobile app and AI-powered chatbot enable users to manage their policy, file claim, and receive instant support. Services like Takaful AI and You for Life offer digital onboarding, paperless transaction, and real-time claim progress, especially important in rural and underbanked regions. This has been particularly successful in Southeast Asia, where internet and mobile usage is high. The last one is the cross-border partnership, which expanding the global reach of Takaful. International collaboration between Takaful and conventional insurance company have developed Sharia compliant solution for wider market. For example, Prudential and No Takaful have co-developed family Takaful product for global Muslim client. Additionally, global regulatory bodies like IFSB are working on standardizing Takaful regulation internationally to promote greater market confidence and inclusivity. Now, let's look at some future trends that will shape Takaful landscape and Islamic finance as a whole. First one is the sustainable and ethical investing. Takaful principle naturally align with ESG, environmental, social and governance framework. These values promote ethical business practices and reject harmful industries, which all reflect to Sharia guidelines. This positions Takaful as a powerful tool in sustainable finance, attracting both Muslim investors and non-Muslim investors. More and more Islamic financial institutions are incorporating ESG screening into their investment strategies. Next, the green Takaful, another growing areas which support environmental protection. These policies offer protection against climate risk and support projects related to renewable energy. In Malaysia, Takaful Malaysia has developed Green Takaful linked to solar energy installation. Such innovation also contribute directly to the United Nations Sustainable Development Goal (SDG), especially climate resilience and clean energy. Lastly, the micro Takaful expansion. Micro Takaful will play a critical role in improving financial inclusion in the future. Targeting those who traditionally lack access to insurance, Micro Takaful offer low-cost protection against health risks, crop failure, and other vulnerabilities. For example, in India, Uplift Mutual provide health Micro Takaful for low-income families, while in Kenya, Kilimo Salama offer crop insurance using mobile platform and automated weather-based claim system. These efforts contribute to poverty alleviation, financial resilience, and economic empowerment of underdeserved communities. Now, I will be presenting on the conclusion and opinion of our analysis on Takaful. Throughout this report, we explored how Takaful, based on Sharia principle, offer a cooperative and fair way to manage risk. Unlike conventional insurance, which involve risk transfer and interest-based investment, Takaful operates on the principle of mutual cooperation, ta'awun, donation, tabarruk, which participants contribute not to make profit, but to help each other during time of needs. Next, Takaful companies don't operate like conventional insurer. They use model like wakalah, agency, or mudarabah, profit sharing. This means that companies manage the fund on behalf of the participant with full transparency and fairness. Another key finding is the ethical and structural differences between Takaful and conventional insurance. While conventional insurance transfer the risk to the insurer, Takaful share the risk among the participants. It avoids elements like riba, interest, gara, uncertainty, and maisir gambling, which are all prohibited in Islam under Sharia compliance. We also look at the real-life example of Pro BSN Takaful in Malaysia. This company shows how digital technology like cloud-based platform and user-friendly app can help Takaful grow while still being fully Sharia compliant. Despite its many strengths, Takaful face many challenges, especially in non-Muslim majority countries, which are low awareness, regulatory issue, and limited Sharia compliant investment. However, the industry is adapting very well. We now see innovation in areas such as micro takaful for low-income group, green takaful that protect the environment, and the use of insurtech for easier access and management. In my opinion, takaful is highly relevant in today's global financial world. People are now more interested in ethical, responsible, and inclusive financial products. Takaful fits very well with ESG goals, the environmental, social, and governance, which many investors care about. It avoids harmful industries and focus on fairness, justice, and social protection. With continued innovation, supportive regulation, and more awareness, Takaful may serve not only Muslim but anyone looking for ethical finance, help build more inclusive, fair, and sustainable global financial system, and also play a strong role in poverty reduction and economic empowerment. To conclude, Takaful is more than just an insurance model. It's a value-based financial solution with global potential. Thank you for your attention.